The example I'll give is the tariffs, right? I think until something's solidified, then you can make a trade off of it, unless you want to just play the volatility of what comes with. Like for dollar Canadian, I realized that the Trump tariff news was affecting the dollar Canadian a lot. It would have swings of 100 pips to 300 pips and then come right back down. So if you're trying to take that approach, then definitely be careful when you're trading at. Trade smaller for sure. That's what I did with dollar Canadian. Um, until something is solidified, then you can probably place a long-term swing trade on that. Eric, what do you think of backtesting? I think you learn more trading a smaller live account than backtesting because backtesting takes away of the psychological pressure. I think both are equally important. I think backtesting will kind of filter if you should continue forward testing. Like if you're backtesting and clearly it's not working out, then you probably don't want to forward test it because you might be wasting some time there. That's how I'd see it. Hey, Chandler.
Hey, Alan. It's nice
How's it
to
going?
speak to you in person.
Yeah. How you doing?
Doing good. I'm doing good. That was awesome. Your first time by yourself for the full session. That was great.
Oh, I'm sweating a little bit, but it's all good here.
Yeah, no problem. No, you did great. I'm putting your channel in the chat here, guys. Go check out Alan's page, Aspire Trading. He's awesome, man. He's got a few videos. His channel's pretty new, but he posted yesterday. So that's you're making content. So guys,
Thank you.
go check his page out. He's posting free stuff over there. So it's pretty awesome. Alan, we're gonna let you go. We've got Chris Pulver in the back rooms here waiting to go. And I guess we'll see you next time.
Alrighty, sounds good.
All right.
Bye-bye.
We'll see
Thank
you
you
then.
guys for having me.
Of course. See you. All right, guys. We got Chris on the way. We're going to play a quick break, and then we will be back with Chris right after this.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Tuesday. Welcome back. We're sitting here just off the all-time highs in the SPX. Take a look at equal weight. Hanging on. I'm going to be looking at some positions here. SPX, XSP, NDX, maybe some of the equal weights as well. We're not quite at the highs on equal weight. We go to the Nasdaq. Nasdaq poked. Didn't hold, not yet, but we poked all-time highs again on Nasdaq today. Here's the QQQ. Right there, gapped up higher. We are fading. I'm seeing the futures market drop a little bit. Let me go to NASDAQ futures. So just in the last hour or so, we've had pretty much straight down on ES as well as NQ. So if this is going to be leading the way, if we're dropping on futures, I would expect the indexes to be a little bit soft going into how they close today. So gapping higher. You know, again, you're going to celebrate the news. You're going to see it. I wouldn't be surprised if I go to marketwatch.com and it's going to say all-time highs on NASDAQ. But if it closes red today, we'll see if it actually holds that all-time high. That's what happened here on the S&P as well. So this is, I don't think it was at a high. We hit a high on Thursday or Friday last week. So we had an all-time high number one, that is 610.78. And then on Friday last week, 610.99. So that's one high for the year, two highs for the year. Today is right at the same level, but just not quite there to poke out a fresh high. I'm curious what the mainstream news says. Let's go Market Watch. Indexes forfeit early gains after long weekend. Okay, it's at least acknowledging that it's red off the top. Let's go futures market. Futures market is mixed. We're showing Dow futures are down. S&P futures are now flattened out to basically null on the day. NASDAQ futures have gotten into red on the day. Gold at 29.45. All right, we're surging towards that 3,000 handle. Okay, so today's close is going to be important. I said this on Friday, the daily close, the weekly close. We had a holiday with President's Day on Monday, so Tuesday, Wednesday, Thursday, Friday this week is a monthly expiration. I'm as curious as everyone else, like where we're going to be for the end of the week. I did end up taking a couple of early manageable trades. Most of the time, I kind of sell premium on SPX, and I chose a couple of trades in December. We went out about 40 to 50 days, and I'm just saving risk on the trade. I took losses, but rather than taking like a $3.50 loss, I'm taking about a $1.10 loss or a $1.50 loss. So I'm saving myself some reasonable risk there, which I'm comfortable with. And then we'll see where the where prices are going to stack up. As far as implied volatility goes, right now we're looking at IV rank of 17.7, which is a little bit higher than last week, not much higher, but we're still in this like low. I'd say like low-ish, not like super low, but I'd say low-ish volatility environment right now. And the only thing that's going to get the market excited as far as volatility goes would be a big, nasty sell-off. I don't see any major news this week. I know President Trump is on the calendar for today. If anybody saw that, tentative between like 4 p.m. and let's say between 4 and 5 p.m. Eastern time. It's just going to be talking through executive orders. So whether that is Tariff 3.0 talk, if that gets the market rattled at all, it's after closing bell. We'll see if that creates any type of drama for this week at all. Other than that, I don't really have any major news outside of some rate decisions. We had rate decision yesterday for RBA. They did end up cutting rates 25 basis points. Currency strength today is reflected by everything pretty tight. New Zealand dollar is a little bit softer. Yesterday it was Japanese yen strength. So my Japanese yen futures position, that's /6J, doing pretty well. My FXY shares doing pretty well. Today, the dollar index catching a little bit of a bid. I still think the dollar finds some support around 106 to 105.50. We'll take a look at gold, silver, oil, things like that. Okay. So if we can't hold and sustain these closes above the highs, then we obviously might give some back and dealing with some of this chop. So we could have a horizontal range in here that we're dealing with if price falls back into the center. The other one would be just a little bit more of a top there, or I suppose we could. That's a tough trade. If we went a little bit higher like this, if I connected these recent highs and these recent lows through the election, I'm not saying this market can't find a way to go higher. Okay, but given how we faded off the high, faded off the high, faded off the high, if we end up coming back to the mid price, then I still think this market is a lot of indecision that eventually is going to have to break. But this is also getting like higher highs and slightly lower lows, which could drive traders crazy. And, I'm actually okay with that. Trading through that noise and trading through that chop, I'm okay with. Getting a correction that comes back and revisits these kind of post-election lows. That would potentially be a correction of around, almost 6%. So do we get it? Maybe. Do we not? I don't know. There's no crystal ball here, but I'm still bracing for some type of movement back into my 200 moving average. Okay. I posted a video yesterday on TradingView. So if anybody is in the TradingView charts, you can just find my handle on it's just Chris Pulver with no spaces. And I posted a video yesterday. This is also on my YouTube channel and on my respective outlets and whatnot. But just basically said like 2025 market outlook, cautiously bullish, key bar counts. And I did this for SPY as well as the days we've closed above the 200 moving average on the Nasdaq. The Dow has the same type of bar count. So I'm just a little skeptical of how much more bullish we can get without having like a move that eventually comes down. So look, I could acknowledge this market goes higher, but I think we're going to snap back down into some capacity, having some type of volatility expansion that essentially works both ways. Okay. This is interesting right here. 90% of fund managers say that stocks are overvalued. Call me contrarian, but the pain trade would be that, unless fund managers are actively short, just saying it is nothing. If I've seen like active managers are currently short, then they're idiots and they'll probably see the market go higher. That's the pain trade. But if it's just a comment, it's just a comment. All right. So anyway, that's where we're at. Will we close above the highs today? We'll find out if we see a red candle today. I mean, futures is still kind of drifting lower. Look at this. I mean, in my opinion, futures leads the way. So if we're seeing fresh lows over these last 60 minutes or so in futures, does that drag the indexes down lower? It's very possible that off these highs, this is SPX. We are not quite at the all-time highs. If we end up pushing lower, okay, fine. XSP, same thing. SPY, oops, just off the all-time highs. Poked higher on the Qs, but we are fading back in. Equal weight, same thing, poked to the highs, fading back in. Dow, go to this chart here for the Dow. Not quite at the all-time highs, a little bit of a compression on the Dow. Either we are going to squeeze into this to make a decision, or we are at the highs, but we are going to fail and maybe come back to range levels and find this 200 moving average. So again, if you're patient, I'd like to wait for dips to buy. I just don't know if we're going to get it. Oh my gosh. I think my Discord server just got hacked. Yikes. What the hell, man? Like, I have such a simple Discord channel and it's just a joke. So dumb. Give me a second here. Good Lord, this is everywhere. I'm definitely not going to spend all this time babysitting. Cool. Well, that makes Discord less fun. I might just close the whole thing down. This is annoying. All right, back to the charts. Dow. I'm still looking for a correction back in the 200 moving average. S&P, still looking for a correction back into the 200 moving average. This doesn't make me bearish, okay? It just makes me cautious of how much higher we can go without having some type of move back into it. Or at the very least going nowhere, okay? Going nowhere and letting price just chop around as this moving average in red catches up. If it catches up, that's fine. But to me, that's the dynamic support that I'm still going to look for in the market. All right. RBNZ is expected to cut rates this week by 50 basis points. And currency strength this morning looks like it's reflecting that kind of anticipatory news that is coming out today, I think, after market. So we have RBNZ today. That will be around 8 p.m. Eastern time, looking at a 50 basis points cut. That makes this whole carry trade a little bit more interesting. You're starting to see more central banks cutting. We've gone from everyone raising rates and pausing following the Fed's lead, and now we are noticing that there is a pretty substantial monetary policy divergence where banks are cutting rates, Fed is pausing, holding rates, getting the cut kicked down the road out to like maybe September or October of this year, and only one cut from the Fed is anticipated. Inflation prints last week certainly didn't make the Fed's case any better for cutting rates this summer, so it's been pushed out into the fall. If the markets are lucky, they get one cut this year. If the Fed stays hawkish, they might get 0 cuts this year. If the Fed is lucky, they don't have to do anything on monetary policy and just let inflation kind of naturally work its way lower. Let's take a look at dollar and yields and things like that as well. Okay, so let's keep going through our Russell is hanging in there. IWY just off the highs. I'd like to see some more chop in this. This is top 200 growth for Russell. I like this consolidation. If we can pull back a little bit into this one, I'd really like a pullback towards this 200 moving average. And I'd be looking to add some more shares of IWY, which I have. IWX, this is also top 200 value. This would have been a nice one. I missed that opportunity right there around 78. That would have been a sweet little index trade. At least, top 200 value just to be diversified. I think there's some potential for small caps this year versus your traditional large caps, but I think the market needs large caps to perform well and be stable. I think Mag 7, Mag 8, or whatever what the heck you want to call them, Mag 7, Elite 8, Fantastic 8, who gives a crap, but they need to perform well. They need steady. They need lots of cash. They need lots of strong fundamentals. They need to stay resilient. If they turn over, this should be everyone's legitimate concern. If Mag 7, okay, if Mag 7 holds here, then there's going to be some resiliency in the market, but maybe not any big time direction. But if this pulls back, and I'm curious how this all looks like individually, if you look at Apple or look at Microsoft or Google or Tesla or Meta or any of the Mag 7, do they pull back towards this moving average first? And if so, is that a buying opportunity to get a dip? Yes, no, maybe. Percentage wise, that actually would be a pretty strong drop. Let's say we find that 200 moving average. That's a 12% correction on Mag 7. That's pretty decent. Now, respectively, each stock might be bigger than that. We might have like a 20% correction on something. But I think that also offers up an opportunity to at least look to sell some premium, trade some options, or even buy some shares. But Mag 7, I think, has to stay resilient to keep this kind of risk appetite and resiliency in the market. VIX 1 day surprisingly down 29.61% at these highs. VIX 30-day is up and elevated a little bit. We had lows from Friday around 14.75. It's up to $16. We're still kind of trading a lot in the teens on the VIX. Anything at SVXY? No, just waiting. Dollar index. I still think there's some room to fall into this like 106 to 105.50 area. I am only in, I think New Zealand dollar long is my only position right now. As far as dollar pairs, I closed out of Aussie dollar for a winner. I closed out a dollar CAD for a winner. I closed out a dollar Swiss for a winner. I'm not in dollar Swiss. I'm not in euro dollar. Euro dollar doesn't look like a bad short to me. So playing the euro dollar, I don't mind this right here. So if we went dollar, it's basically the inverse of dollar index, right? If I think dollar index has some 106 to 105.50 support looking for a bounce, if I were to look to short the euro dollar now, I think this going back down to the lows seems reasonable with a reward to risk that's favorable. So there's a bit more reward here for risk. Okay, so about I don't know, maybe 1.5 to 1, maybe 2 to 1. And obviously that big discussion if we get to parity, 1.00 would be obviously even better reward to risk. So as long as we are, and I'll make this, if anybody's trading this, it's like trade small, maybe stack in some sell stop orders. If we break these lows, go to parity 1.00. But as long as we stay less than 106, if we stay less than 106, I'm looking to be bearish and stay bearish on euro dollar. ECB is cutting rates, Fed is not. Maybe that makes this a little bit more attractive. This ranging a little bit longer is fine, but if we get back above 106, I want to see even on this daily time frame, the daily candle would have to close above this 200 moving average. It hasn't done that since we turned the corner back in October, November of last year. So to me, this is a good spot. There could be some noise here with a little testing of those highs, but if we just come right back down to range levels, I mean, I don't mind that trade. So profit target 1, if you want to hold on for more, see if it breaks, go to parity. Profit target 2 would be parity, and then trailing stop losses down to like 96, which is where we were before this thing bottomed hard. Okay, but I think this looks fairly reasonable for a short on euro dollar. Pound dollar, I actually don't like the pound dollar that much. Pound dollar, if it turns, I would wait for a trend line break into this. We get a trend line break right there, then I would look to resume some selling pressure on pound US dollar with stop losses above a U-turn high. Watch out for a test or a fake out of that high, but I think there's going to be a pretty decent rejection area right off the daily 200 moving average or at the backside of this trend line. So somewhere in here, I'll look to see if this will kind of roll over, give us some confirmation, stop losses above, and then trade to either same lows or fresh lows. And again, look for your potential reward to risk. If you can get your reward to risk set up bigger in reward than risk, that looks like a pretty good trade. Okay, let's go oil. Oil still pretty choppy for right now. USO oil futures. I closed out my iron condor for a little winner. I'll take that trade. I'm not going to do anything else right now. I don't know if we're holding this floor. It seems like we are. I'm just not taking the chance on this thing potentially breaking. If anything, I would say with oil, if I can position for defined risk down here, this is probably what I'll wait on for oil. If we end up coming back down, maybe we don't do this at all. Maybe this is, breaking the high from this recent swing. Maybe this is a swing up, a basing, and then oil prices are going to start leaking a little bit higher. Maybe. Otherwise, if this is a floor that continues to be defended, then we come down into this level around like $66. I'll probably look at some defined risk trade on oil futures and just do like a bull call spread. I can buy a 66, I can sell a 67, maybe get like a 1.25 reward to risk or something going on this trade. That's what I was doing back here for a few months. Once we got back in the middle, so we had this big swing up and down, I did an iron condor where I sold, a bear call spread above and a bull put spread below. And I went from 20 cents, closed it out pretty quickly within about a week or two for 12 cents. So took a partial win there. But that's about it right now directionally on oil. I just think we're going to deal with a lot of indecision. Natural gas, on the other hand, I'm long on natural gas and I'm liking this trade. Hopefully we start making some fresh highs again and resuming the upside. XNG, this is natural gas index. I want to take a look here and see unleaded gas futures. Is there a feed for that? Let me go gas futures. So we got nat gas futures. Son of a bee. I'm just looking for like pay at the pump prices or just unleaded. I don't want Singapore unleaded gas. Nope. Fudge. All right, let me go AAA fuel prices. Average 316. Let's go back to the last. Let's see. We go a month ago, 312 up to 316. So we're higher. A year ago, slightly lower. But off the recent lows, we were down to like $3 national average. Now it's at 316. So I'm trying to find a chart for just the pay at the pump because consumer-wise, inflation-wise, energy-wise, that's also a good sign of like sticky inflation. Okay. Anyway. All right. Gold. Gold, green on the day. We had recent highs that were slightly higher, 29.43. We're at 29.27. Again, this might be just kind of walking towards that round number at 3,000, which is totally fine. I'm still looking at a pretty high bar count on gold. I wouldn't be surprised if this thing is making its kind of final run into a level where once it is ready to turn, I do think gold has pullback potential. I do think in this dynamic support level, pullback potential. I'm long gold, and I'm still going to stay long gold even if we get a dip and a pullback. I'm going to remain long gold, but I'd prefer to be buying some type of correction. So I'm holding my shares of GLD. I've got some credit spreads running longer. Those are all looking pretty good. Question I have is if silver can also match the enthusiasm that we're seeing for gold. I would love to see, even if this is choppy, I'd love to see silver still making higher highs and getting up to a measured move around 35.88. I do have some sell calls on my SLV. I've got a bunch of credit spreads and some other options there. I've got some SI futures as well. So I like silver positioning wise a little bit more. I guess you can call it poor man's gold. But XAU, XAG comparison, we're sitting off these recent highs on the range. So this resistance, this support, if this resistance holds, I would like to see silver get the bid and get the upper hand a little bit. Okay. Bitcoin. I think I'm going to look at some fresh positions today on Bitcoin. I might just do additional accumulation. So probably some IBIT, FBTC, just a spot price. A lot of consolidation. And I expect that to be the same. We might pull back to like this 91K support. We might come back up here towards 107, 108. More accumulation, I think is the play. If we're at a spot that's low enough, could we pull back lower? Sure. Be aware of this. But if I add a position, I'll just put a plus sign here. If I add positions, I would add around that 92 to 91,000 mark. And if we pull back into, let's say, 85 or 80, I probably add another position or two in here. Do we get to 125 this year? Maybe. Do we get to 150 this year? Maybe. We obviously have to break the highs to do that. I think the markets themselves, I mean, we've got to see the indexes probably creep into all-time highs with some momentum in order for Bitcoin to do the same thing. I don't know if the big news is going to be, the US has to establish some type of strategic reserve or some type of like straight up buying in Bitcoin. I don't know what that means or what it looks like, what it takes, what it requires. I don't think it's easy as just the president saying we're going to do it. So there could be the same thing we saw last year, which is a lot of accumulation before we got that big surge after the election. We could be doing the same thing here if it's like, okay, wait and see, but I don't mind having some accumulation just in case. I do believe there's a lot more widespread adoption. I do believe there is a need for dollar alternatives, and I think that other countries are looking to go non-dollar related. And so rather than lining up behind BRICS, which would be like your China, Russia, I mean countries that arguably are not going to be like the strongest to follow. I still think Bitcoin could be like that stronger decentralized alternative. But price action wise, it's not nearly as exciting. And what's funny is all your crypto peeps are probably nanosecond attention spans, and this is making them bored. So what are they doing? Is they're playing the altcoin market, they're playing the meme coin market, and they're getting burned because altcoins, meme coins are doing like they're trash right now. I mean, has anyone looked at Fart Coin? Is that a thing? I don't even know how to find it. Fart Coin USD. Okay, how's that for a pump and dump? So you're bored with accumulation of Bitcoin. So what are you doing? You're chasing garbage, right? And in this case, you're literally chasing shit. Not really, but you get the point. But it's crap, right? And you go to Trump coin, Trump dollar. I don't even know what this is. Same thing here. Trump went from $5 billion to nearly $20 billion, and he's back down to, maybe 8 to 9 to 10. It's just, this is what's happening in the crypto space. This is not what I'm interested in. I am fine having some strategic allocation on Bitcoin. I think that's fine. I can accumulate, see some stability. I'm fine with that. All the other stuff, I'm not interested at all. Okay. All right. Other stuff, MicroStrategy, stable. I've got this one with an expiration into March. As long as it stays above 310, I make a pretty good chunk of profit. I might look at a roll on that today, actually. Might look at a roll on that. That would be MSTR for roll. Okay. Let me see Meta really quickly. Meta had like 20 some days in a row. Oh, damn it. That's what I was looking at for this week. It finally made headlines like it had, 20 to 21 winning days in a row or whatever, which wasn't quite true, but we had a lot of closes higher. I'm not surprised it's going lower. Netflix, nice little red day on Netflix as well. This should bring my butterfly back into play. Let me take a quick spot check on my butterfly trade. So Netflix, right now, broken wing butterfly, 1, 2, 3. Okay, so the good thing is I'm right in this profit trap window. I just need a little bit more time in the trade. So we'll see how this week kind of stabilizes or sells off. Going into these monthly expirations, though, part of me would like to see like this stock fall a little bit. Actually, I wouldn't mind if it falls a lot a bit, but I need pin price would be max profit around $1,100 if we stay at 1040. If we're down below that, I still make about 110 bucks. So I'll keep an eye on that one. I'm totally fine with this one, selling off. We're at 1065 today. It's down 30 bucks. Not bad. Hopefully there's more to go. Again, just give me a pullback, man. This one hasn't had a pullback test of the 200 moving average for over 300 bars. So again, decent stretch, decent bar count, and decent stretch away move. This is another thing that you look for these 200 moving averages, the percentage away from it. Okay. How many times have we seen Netflix get 27% away from the moving average? Probably not very often. Even right here, when we put in a high, we were only about 19% away from the moving average. So my point is, like, it gets pretty overstretched. There's about a 32 to 33% move. So, okay. And then what it do is spent months pulling back. So anyway, we'll see. We'll see if I time it right. I've got about 10 days left in the trade. But if I can get this, working through and staying in my profit trap, that'd be good as time gets towards that 20th expiration. All right, I don't mean to skip ahead here, but I was just curious. So we'll go back to Bitcoin right here. Probably looking at accumulation on some IBIT today. MicroStrategy is fine. Coinbase pulled out a little earnings win last week, which I'm happy with. Now I have some ratio spreads. We had a miss. Nope, actually we did top bottom was good on Coinbase. So I've got some ratio spreads and some 111s there. Ethereum still needs to break this trend line. Japanese yen, kind of loving this trade right here. If we get above these highs, I have a bull call spread that my risk is 687 for max profit around 1,200 bucks, just shy of a 2-to-1. But I like the trade and I'm long Japanese yen. This is my favorite way to trade it as opposed to trading Japanese yen in currencies because I don't want to pay the negative swap. If we go to FXY, I own some shares of this instrument and I own some shares around $59. We're looking to see if this has any return back into the mid 60s. Okay. Outside of the US, markets are doing well. I talked about this a lot in my trading view video that I posted yesterday. Non-US markets are outperforming the US. German DAX is crushing it this year. No signs of stopping. I do think this has to have some type of pause or pullback, though. Again, the stretch away move is getting to be like kind of a noxious distance away. So just be mindful of that. I think a pause or pullback would be great to still buy a dip and get a resumption of this trend. The FTSE just off the all-time highs, but man, this DAX is like one of the best performers this year so far. Argentina still looking for some indecision. Hopefully we'll find this 200 moving average. China pulling back a little bit. I'll take a look at some of those China stocks. Brazil moving nicely off the lows. I have some shares of EWZ. Mag 7, here's Apple, right in the middle, kind of a high-low range. Amazon falling down. Crap. I knew I went out to the wrong. I needed this to get below 222. I should have went out to the monthly expiration. That's my bad on my newsbreakers. Google, fine. I'm dollar cost averaging in. Meta selling off the low or the recent highs. MicroStrategy, no pulse right now. We've just sold off, which is fine. I just did a little dollar allocation in at 416. Netflix, nice little sell off here. I'm happy to see that. I need this thing to stay below 1040. Nvidia, we officially filled the gap. I closed out my profits on my bull call spreads. Now it is ratio spreads and a bunch of naked puts or cash secured puts because I don't mind owning the shares. But I did that right at the 200 moving average. So more chop ahead. Keep an eye on that MAGS, MAGS. Actually, let me add in MAGS to my. I don't care about triple leveraged. Don't ask me to trade double, triple leverage stuff. I'm gonna put this up for my charts here for Apple. There we go. So right above this. Now I have just a spot check on whether MAG 7 is up or down. Okay, Tesla. Off the lows a little bit. We came down and tested 325. We're up to 355. I'm still looking at Tesla as a possible accumulation. Also, we hit symmetry on this correction. So high, low, lower, high, lower, low. And you can see that little bounce is pretty good timing right there. Timing that bounce. And I did add some shares in. I got filled at 360, 250 for a small allocation. Got another position pending at 285. And lots of income trade opportunities from this week expires. This one's going to be full profit. We're probably not dropping to 275 today or this week on Friday. So this is going to be a full credit of $2.28. So it'll be a nice little winner on Tesla this week. I'll add that up. And then for March, very similar, $2.17. We have to go all the way down to 255. So most likely full profit. These trades as well, probably full profit. I don't think Tesla's really going back into the 250s. It could still just continue to wane, but this gap fill, I think there's going to be plenty of opportunity here. Once we get on the right-hand side of the trend line, I want to see some Tesla momentum, see if we can get back to these highs. Does it do it all by itself? Probably not. We probably need to see some risk appetite as well. Okay, and I am surprised with how stable the indexes are today. Berkshire Hathaway almost all the way back up to the highs. That ratio spread expires in March, looking pretty good for a couple bucks profit. Bonds, TLT, right at the backside of this trend line here. It's hanging in there. It's surviving. This is going to be an interesting breakout. If we get a breakout on TLT, that's good for yields to be dropping lower. Not there yet. We're still not. This would be my left side of the trend line. right side of the trend line. But if TLT can make a break above, let's say 90 to 91, that's probably making a pretty strong case that the bond market is looking better and yields hopefully have some more downside. 10-year yield is really, really volatile, but hopefully we are doing something along this line where we have a fall pullback and then another fall pullback. I'd like to see another fall. So in the low fours would be kind of nice. I don't know how much trend direction we're going to see here. I really don't. If we get down to these lows again, that would be fantastic. But something tells me with higher inflation readings for like 5 months in a row, we're probably not going too much lower than like, I'd be shocked if we're below 4%, to be honest. So we're probably going to stay sticky around this like 4.2 to 4.8 window. I would just be expecting a lot of back and forth and higher for longer. All right, bunch of future stuff there. Spreads are still relatively tight, which is good. Here's some China stuff. So HSI is up. CQQQ gapped higher, fading a little bit. Alibaba is just on a runaway train, which I'm loving. Up 60%. Wow, that's crazy. 60% since January. Alibaba's doing pretty good. So my overall position, Alibaba, I've got about $10,000 on Baba right now. Question is, do I want to take some profit on that? That is I suppose that's the $10,000 question. I have some good positions. I want to see if there's some momentum. So if we have a push and a pause, I do think Alibaba has room to go higher. Man, I mean, we could be eating into these gaps in the 130 to 160 zone. I mean, if this is it's not quite a perfect double bottom. Like this would be my double bottom. But even if we hit symmetry here, this is what I was targeting in the first place. So we're right there at symmetry. That's a good profit target. Let's see. We are above the yearly 5 period. We're in a buy zone for everything on the daily. I think if we go up and we flag, I'd like to see some more upside. I hope this doesn't just get faded all the way back down. The reason I'm just looking at this one is I don't have anything covered on Alibaba. If I wanted to take the profit now, I would probably take the profit, close out 10K. That's cool. I'll be happy with that. And if I bought more shares, I would put in a collar trade. So if I bought shares, I'd buy a put, sell a call, and if it went higher, okay, fine. If it goes lower, I can protect some downside there, just in case this thing is not as efficient. I think we could still go higher. I really do. I think this whole idea of like lifting animal spirits and maybe having some positivity and all-time highs in the U.S. and China's doing well and Germany's doing well and non-U.S. is doing well. It's just so aggressive with how it ran. The thing ran 60%, in about a month. And we also have earnings on it this week. So we have earnings on the 20th, which is what, Thursday morning. We have earnings. So if earnings comes in positive and we get another surge higher, I might look at closing out the gain. And I don't know, I'll consider reestablish position. What is my potential fair market value on Alibaba? Oops. So it's getting closer and closer to fair market value. Price to earnings multiple is up. Obviously, stocks can be overvalued. Interesting. All right. Well, I might I don't know. If we're sitting here like ripping higher prior to earnings, I might take profit. I might look to see if the earnings pop is going to be positive. I mean, we've had a pretty decent earnings momentum streak here. Problem is the stock didn't do anything. But I look back at these previous highs, like clearing that high is kind of a big deal. Staying above this recent resistance would be a big deal. I think if we can get a bull flag out of this and maybe get a bit more momentum to the upside. Let me see if there's momentum that's waning on this. Let's go Alibaba here. Okay, there's still momentum here. So I'm going to look for something like this. If I start to see that my oscillator starts to change, we'll see. I'll see if we can go like just a little bit higher. Let me check on momentum. Let's go to a momentum oscillator. That was a nice little consolidation zone. One more workspace to pull up here. All right, let's check this one out. Alibaba. Okay, so we do have some overbought conditions. Not a surprise. But once we hit overbought right here, we still had some upside potential back in September of last year. So there's still some movement potential. Also, if we're making higher highs with this disagreeing or with this disagreeing, which I don't see right now. So on the daily time frame, I don't really see the disagreement to say I'm going to hold off or I should be taking profit. On the weekly chart, I don't love that. That's a weird print though. That's a really weird print actually. Weekly chart, we're above the 200 moving average. I mean, I think we got to get something started here, man. Like going back to 2015 to now. I mean, we're talking about a decade. It's like this thing has been bottoming out for a decade, looking better. I know it's had 2 big surges and it's been a fast mover, but I mean, even if this was a high low, even if this was your high, this is your low, and we just pull back like to the 38 to 50% zone, I think I'm just going to hang on to it. So let's go high to low. Okay. I mean, even a 30% pullback gets us up into 138, 139. I'm okay with that. Getting back to a 382 is a 160 price point. Okay. All right. I'm good with that. I'm going to hang on to this a little bit longer. I think a 150, 160 exit point to me would be fine on Alibaba. All right. I'm willing to ride it out a little bit longer. Baidu, saw this thing gap lower. They had earnings today, positive, and yet the gap was pretty strong to the downside, which isn't bad. I own some shares. I've rolled this up to like 100 by 105 by 110 covered call wise. So now these covered calls are probably looking a little bit better. My break even's in the mid 80s. I'm gonna try my hand and hang on to this as well. So any China exposure that I have is pretty much through these few stocks. FXI, I did have some shares. I let this one go back in September. KWeb, same thing. JD hanging in at 39. I've got it covered at 39. Earnings is early March, and I stand to get it called away right now, just at 39. I think I'm just going to let it hang out and get called away, unless I can get a really nice roll out of it. But right now, I probably can't. Schwab dividend, Schwab growth, fine. Advanced decline line, how many stocks are above the 50 moving average? Nasdaq, how many above the 50 moving average? This is interesting. This is also a timing indicator for me. If we start to see Nasdaq 100 stocks above the 50-day coming up into like 92, 93%, to me that's a signal to get short / protect some profits, maybe even hedge the indexes, but we're not there yet. And then same thing on the S&P. Right now we're in the middle. So S&P might, broaden out a little bit, but if we get up into this area, I'd be saying looking to hedge or be protecting some profit. We had a chance to, get the dip with some of those corrections we saw back in December, which we were pretty aggressive on some of those dips. All right, other stocks, Costco pulling back, Walmart pulling back, Nike working nicely off the lows, Home Depot lows, nothing there. MasterCard stalling, Visa still making some fresh highs. American Express off those recent highs. Johnson & Johnson, that's good. Look at that recovery on Progressive. Insurance, CB's not doing as well, but Progressive, the flow keeps flowing. Still working out. Palantir, fading a little bit off these recent highs. That's still just a ballistic stock that probably needs to come back and have a reality check. Carvana, I took a trade in this last week. I'm looking to see if Carvana with earnings this week can get above $300. Redfin, Zillow, Nothing there. Sector-wise, XLC, which I'm in. This one's looking good for full profit. XLY, still some sideways. XLP, a lot of volatility there in consumer staples. Energy, I just did some cash secured puts here for diversifying. These are probably fine. Financials, surprisingly, one of the better performing sectors this year. This is healthcare coming off those lows, which I'm good with. I think healthcare sector is going to continue to grow. What do we have here? Industrial. I mean, if the AI energy play infrastructure is going to work out, it's going to be an interesting year for industrials, basic materials. I mean, this one doesn't look bad, honestly. I wanted it to come down a little bit lower. It's right at the 200 moving average. But if we put in a bottom here, we could be looking at a breakout in XLB. I'm not super stoked about that trade because it's, as a sector, it's like low premium. If you go individual stocks in the material sector, they're not really that exciting as far as the option trades go. Real estate, probably staying out of that one for right now. XLK is tech. We're up towards those highs. Utilities, probably find lots of dividend plays in there. All right, I'm going to wrap it up. Any other questions for me? That was kind of a full top down. We did some currencies, did some stocks, options, did some dollar, gold, oil, silver, some crypto. I think I'm good. Overall markets on the day, surprisingly calm on the index side, even though we are getting some reasonable volatility elsewhere in individual stocks. I'm looking at a fair amount of indecision today. We might just have some indecision today. We are sitting here near these all-time highs. Question for this week is, are we getting to these all-time highs with some momentum to the upside, or are we going to say, congratulations, we poked the all-time highs, but it's not good enough? I don't know. Trump speaks today between 4 or 5 p.m. I don't know what he's going to say. It might be patting himself on the back for all these tariff talks. I don't know. We'll see what the market does tomorrow. But I've got some trades to hammer out here, some positions to consider. Alibaba with earnings this week. I'm up a decent chunk of profit. Part of me wants to, share-wise, I might just take some of the profit. I still have a bunch of ratio spreads, which I'm going to let those expire. Those will be fine. I think those are going to be fine. The question is, I'm really getting that kind of juiced grunt to the upside. I obviously want to start trailing. That's a big move. I could see us pulling back. But the nice thing is let's say we run like this and we pull back and we have, okay, everyone that missed the trade can now start to buy a correction, right? Any type of pause, hesitation, dip. If we have another push higher, then I'd say, okay, now we're into this open space. Now we're looking at maybe, momentum and price disagreeing. Then I start looking to take profit. We hit some fresh highs. So I think I like the one, I'd say the 140, the 140 to 150 play price target wise. I'm pretty happy with that. So I think I'm going to hang on to Alibaba a little bit longer. Gold's probably on the march to 3,000. But I think we're still due for a pullback based on a bar count. I'm not getting short on gold. I just want to add levels, but I need a pullback. Euro pound, I see the request there. I don't know. Nothing. This pair moves like 30 to 40 pips a day. It's the most boring currency pair in the world. I took a long position here for some profit. So long, took a short stab at that 200 moving average. If this eventually breaks a trend line, there's a strong case for support here. My only concern would be, which central bank is cutting more, right? ECB and Bank of England are both starting to cut rates. ECB is probably a bit more dovish. If we pull back into, let's say, Brexit levels, I think that's still a pretty good case of lots of support in here that's going to base and build. So I don't know. If you trade it small enough, you're not really going to get a whole lot of trouble on Euro pound anyway. I've got a robot trading on this currency pair for that reason. I know it's had some wild and crazy stuff, but it also balances pretty quickly. So I trade like a little grind robot in this one that does just fine. But that's about it. Okay. All right, buddy. I'll let you go for today. Come back and do it tomorrow. All right. Thanks. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. Want more from A1 Trading? Check out the links in the description below or our website a1trading.com. We have lots of free trading tools and channels available for you. We hope you have a great rest of your day, and we'll see you tomorrow.